This chart right here shows you that Bitcoin had a pretty terrible year in 2022. We can see that every single quarter was negative. A new record for Bitcoin. Way to go, Bitcoin. We got a new record. Anyway, as if you needed a chart to show that to you. But according to Van Eck, they are forecasting that the price of Bitcoin could be in for more trouble. Things could be about to get worse. That's basically a sentiment that we are seeing shared across social media right now. Anyway, Van Eck analysts therefore seeing Bitcoin falling down to $10,000 to $12,000 sometime in Q1. Now, the reasoning for this is, of course, the continued bankruptcies in the Bitcoin mining space. We could also see other bankruptcies like Genesis Lending. They are in big trouble right now, under investigation by the SEC. They're cutting back their workforce. Genesis has closed down their wealth management arm as well. So all kinds of crazy stuff going on there. They're one of the biggest Bitcoin lenders, so that could have a big effect on the markets. Basically, we also have a rough macro backdrop continuing to overshadow all markets right now. Thus, a further price decline doesn't sound that crazy, does it? Of course, the contrarian view right now would be that that's not going to happen. But the consensus view is definitely that is the direction we are going in. Now, Van Eck analysts also go on to say that they see a price rally up to $30,000 in the second half of the year as we see inflation really starting to reach those lower levels. Inflation comes back down to 3% by the end of the year or something like that. We can see an easing of energy fears. Europe's going to have a whole summer to sort out their energy situation so they don't have another bad winter next year. A likely reversal by the Fed on interest rates. Now, the Fed has said basically don't expect interest rates to go lower this year, but at least if they stop hiking interest rates, that's going to be a good thing. But where does this 30,000 number come from, and does it actually make sense? Well, let's turn over to take a look at the charts. Well, in order to understand that $30,000 number, I actually want to provide a bit of context here to bear markets and actually give the number I think could even be potentially more likely than $30,000. You see, if we look back at the last two bear markets, we can see we did have big rallies within those bear markets. Again, here as well, the 2019 rally, probably the most famous of those. Now, in both of those rallies, the price actually came within 30% of the previous all-time high. Basically a run so big, so epic, it basically had everyone fooled into thinking that a new bull run is here, when in reality it was just a bear market rally to catch everybody off guard. But how big can a bear market rally really be? Well, if we look just at 2019 here, I think it's pretty indicative. We can see from the bottom up to the peak in the rally was like 330% from the bottom. So from the 2018 bottom up to the 2019 top, over 330%. That's crazy. Now what Van Eck is calling for is the modest 200% from their market bottom potential of $10,000. Now if we come and have a look over here at the more recent charts, so that 200% number would basically get us to see the price. Of course, we'd have to come down by quite a lot still. We'd have to come down by another 40% to get there. But if we did do that in their analysis, and we had this 200% rally, that would essentially get us back to retest the bottom from 2021. Now, to be clear, that would definitely be a great rally, but hardly new bull run kind of material. However, I think we could see an even bigger run, more in line with the last two big bear market rallies, which saw price rallies of around 325 to 350% from their lows to again reach that area of around 30% below the previous all-time highs. Now, if that were to happen, that would give us a 2023 price target of around $48,000, which is, of course, around 30% below the previous all-time high. Now, regardless of how high that actually gets, if we do go back up to retest this resistance area right here, right, if we go back to March 2022, that was a major area of price resistance. It does match up with previous bear markets, but past models are simply past models. They are made to be broken. But regardless of how high the price goes in a potential 2023 market rally, my bet is that it's largely going to come down, of course, to what equities do. And that's sad, but it's true. And that is the state of crypto these days. I wish it wasn't. I wish we were more uncorrelated. Right now, Bitcoin is just trading like a more volatile version of tech stocks. Altcoins are trading like super volatile versions of tech stocks right now. And when equities go down, crypto tends to go right down with it. When equities go up, sometimes crypto goes up, sometimes it doesn't. Crypto, man. By the way, if you're not signed up for Bybit yet, then you need to get yourself an account. 0% fees for spot trading, up to $30,000 in deposit bonuses. It's totally crazy. Find out why over 10 million traders trade on Bybit using that first link in the description to get signed up. Okay, that's it. Subscribe now. See you next time.